Cool, fantastic. Welcome everybody today. My name is Andrew. You can call me Benjamin. And we have in Ben as well from the Bean to Money. So hey Ben, how you doing? It's a pleasure to have
Um,
you in bed.
Thank you. I'm very well, Andrew. It's great to be here.
Awesome. It's a pleasure to have you on. So hey Ben, can you give us a brief introduction about yourself? Dive us through your background, and tell us about Pinto. What are you building here? Can you give us a brief overview about what it's all about?
Sure. Um, I'm Ben Weintraub. I've been in crypto for about 8 years, and one of my core convictions is that the current threat of centralized stablecoins is one of the biggest existential threats to our entire ecosystem and space. Ultimately, there's been so much work and research done into trying to create these networks that are trustless, permissionless, and censorship resistant. But we live in a world where right now, so much of the value on these networks is dependent on centralized stablecoins that the sovereignty of these networks is compromised. Where in practice, if you look at the way that the social consensus around Ethereum or Solana works, the theory states that the networks are actually controlled by the issuers of these centralized stablecoins and not the validators. And so Pinto is an attempt at solving this problem. I believe that the only alternative to these centralized stablecoins that hold a perfect peg and currently serve as the dominant medium of exchange and unit of account in crypto is an algorithmic stablecoin. And so I've been working on algorithmic stablecoins now for about 5 years, and Pinto is the frontier of this new experimental type of money that I believe has the potential to save Ethereum, save Solana, and other Leviathan-free networks from the impending threat of centralized stablecoins.
Sounds amazing. Sounds amazing. Definitely we all are familiar with a lot of stablecoins, and it's really good to have Pinto trying to do something similar and trying to make sure they're different from any other projects in the crypto industry. So let's talk about Pinto. How does Pinto differ himself from other financial tools or platform? What's the difference from other platform?
Well, Pinto is an attempt to be money, to be a currency. And when you think about currency or money, fundamentally it has endogenous value, meaning that the value in the money comes from itself. Uh, Unlike other stablecoin attempts generally, which wrap other forms of collateral in order to create stability, Pinto issues currency, Pinto, and then does its best to create incentives that are native to the protocol that are designed to minimize volatility. So it stands in great juxtaposition to either off-chain centralized stable coins like USDT and USDC that basically wrap dollars or wrap US treasuries, or on collateralized stablecoins like DAI, now Sky, and Liquidity, LUSD, that wrap on-chain value to create stability, where Pinto instead, the value doesn't come from some other asset that's wrapped as collateral. The value just comes from people using it and viewing it as money. And I guess the other distinction to make is, what are the other cryptocurrencies that have endogenous value? It's Bitcoin, it's Ethereum, it's Solana, and I would say most of the success that Bitcoin, Ethereum, and even Solana to some extent have found as money is as a store of value, where even though these currencies are highly volatile in nature and the price goes up and down, but generally goes up, that lends itself to being a great investment and for people to store their wealth in that currency. But when you think about the modern economy generally runs in currencies that are low volatility. The US dollar is currently the dominant currency in the world because of its low volatility in general. And so Pinto is an attempt to generally mimic or model itself after low volatility currencies like the US dollar, where instead of having just a number go up mechanism, the system has an autonomous monetary policy that is designed to keep its volatility as low as possible in order to create utility, not just as a store of value, but as a medium of exchange and a unit of account.
Makes perfect sense. Sounds amazing. Sounds promising. So can you kind of like give us some key features that Pinto offer currently? What are some key features that the platform?
Well, the dominant feature is when you think about a stable coin or a medium of exchange and unit of account, I like to think of it as operating within a trade-off space, where on one axis you have volatility, and on another axis you have yield. And so on sort of one extreme, you have these centralized stable coins that have almost no volatility, but have very low yield in general. And Pinto exists sort of within a different part on this trade-off space where it does have more volatility because, of course, there's no collateral backing it, so you're not going to have perfect stability. But it also has the potential to generate significantly more competitive yields or carry costs than centralized stablecoins. So when you think about the features of the money, it has low volatility. It doesn't have zero volatility like centralized stablecoin, but it actually has an endogenous yield. And this comes from as more people start to adopt the currency, as demand goes up. Normally, demand going up would push the price of the currency upward. And part of the volatility dampening mechanism that the protocol has is as the price comes up, the protocol naturally mints more supply in order to bring the price back down, and it distributes that newly minted supply to holders of the currency. And so even though Pinto doesn't have perfect stability, it accepts some volatility as just the nature of being a money, a currency with endogenous value. The trade-off that holders receive for accepting that greater amount of volatility is some sort of positive and potentially highly competitive yield.
Nice. Sounds amazing. You know, like if I may ask, definitely before you create Pinto, there's definitely a motivation that gives you a certain confidence that if I create this platform, if I monetize these and share it with other audience, it's going to bring benefit. So can you share us some motivation behind Pinto creation? What motivates you, and how do you believe it's going to benefit users who want to get involved in the ecosystem?
So, not to digress too much into history, but this threat from centralized stablecoins is something I've felt strongly, generally since USDT and USDC started to really take off many years ago, and it was around DeFi summer 2021 when there was a whole suite of algorithmic stablecoins that were spinning up, ESD, DSD, and Basis Cash. Basis was earlier in like 2017. But in DeFi summer, as these protocols were starting to be adopted, people were playing around with them. For me, it was very much a validation that the market also agreed that there was this existential threat from centralized stablecoins, and that trying to create an algorithmic stablecoin was a necessary pursuit. So Brendan, my co-founder, and myself, we ultimately decided to embark on creating our own once we took a serious look at ESD, empty set dollar, which was really the frontier of the algorithmic stablecoin space at the time, and thought that we could do a lot better. And so originally, we created Beanstalk, which we launched in 2021. I guess the time when ESD and stuff were taking off was really late 2020. And in 2021, around in August of 2021, we put out Beanstalk, which was our first attempt at solving this algorithmic stablecoin problem. And it did quite well for the first 9 months, where it grew from zero when we deployed it to around 200 million in TVL at the time where it was exploited in April of 2022 via a governance exploit. And so whereas we generally were working on solving the economics of algorithmic stablecoins, there was a flaw in the governance mechanism that led to the entire value in the system to be drained. And so at that time, we sort of had an existential question to answer, which was, do we have the conviction in our work and the progress that we were making in order to create an algorithmic stablecoin, so much so that even after the protocol we were working on and put our heart and soul into was hacked for $200 million, whether it was worth it to continue. And we ultimately made the decision that this was definitely worth it and that we were onto something. And so the hard work has continued. So we continued to iterate on the model and take it as far as we could, and ultimately decided to create Pinto, which is the first ever fork of Beanstalk, in November of 2024 of last year. And so we put that out. Since then, we've continued to collect a variety of really valuable and insightful data into the mechanism and the model in ways that we can improve it. We've continuously been improving it over the past 10 months and are in the next month or two going to put out sort of a final planned upgrade to the model. And not to say that there aren't future improvements that we can make, but if you think about the general iteration cycle, every year or so, we're able to add like a full layer to the model. And we're at the point where we're putting the finishing touches on the latest layer of the model, which is quite exciting. And so now that we feel like the protocol is in quite a strong spot and the finishing touches are being put on this iteration of the system, now it's a great time to go out there and try to spread the word about how the system works.
Oh, makes sense. Makes sense. Sounds amazing. So how can a user sign up and get started, if I may ask?
Well, you go to pinto.money, which is the website, and there are two ways to participate in the system. So there's a deposit facility, which is liquid, where you can deposit and withdraw at any time. You can deposit pure Pinto, which is just holding the Pinto, the currency, or you can deposit various whitelisted Pinto LP tokens. And as I said before, anytime the protocol grows, mints are distributed to the depositors in the system. And so if you want liquid access to yield, you can go to the Pinto Money website, deposit value, and participate in the deposit facility, which is called the silo. The other way that you can participate is through something called the field. So Pinto, similar to the US dollar, is a credit-based currency, which means that fundamentally the holders of the currency believe that the currency is, and the issuer of the currency, the protocol, is credit worthy. So credit worthiness implies that when the price is too low, when there's excess supply on the market, people will lend to the protocol, that the protocol will be able to borrow excess supply from the market and via decreasing supply ultimately bring the price back up. So the other opportunity that people have other than just depositing value in the protocol is to lend to the protocol. And when you lend to the protocol, you get protocol native debt called pods, which are illiquid in nature. And so because the deposit facility is liquid, typically the interest rate received for being a depositor is quite a bit lower, even though it can be very competitive, particularly compared to centralized stablecoins, than if you lend to the protocol. So right now, if you lend to the protocol is offering something like a 700% return. But the interesting part is, because the loans are managed by smart contract, there is no necessarily a due date on the loan payments. Instead, when you get the pods go to the back of what's called the pod line. And so pods are paid back on a first in, first out basis anytime the Pinto supply grows. So if we digress a bit, when the price is too high, the protocol mints new Pinto to bring the price down. And when it mints new Pinto, it distributes half of that Pinto to depositors in the silo, in the deposit facility, and it distributes half of the Pinto to lenders in the field. And so if you're a lender, you basically, when you lend to the protocol, you know what interest rate you're going to get, but you don't know when you're going to get paid back. Instead, you'll get paid back as a function of future supply increases. So right now, the Pinto supply is something like 10 million. And if you lend to the protocol, you will get a 700% return, and you'll get paid back approximately when the supply hits 90 million. So it's an interesting trade-off space, and this type of lending opportunity doesn't really exist anywhere else in DeFi. where you get such a high return, but you don't know when that return is going to come. So those are the two different options that potentially people have to participate in the protocol and benefit from its growth.
Nice. That's cool. If I may ask personally, how do the people behind Pinto, maybe the creators such as you, how did you benefit from the ecosystem? If you use a sign up or take part, what's your basic way to, gain and, make your own profit, etc.?
That's a great question. I and all of the other contributors are participants in the system. So each of us hold Pinto. It's worth noting there was no sort of founders mint or team allocation or anything like that. We had to buy Pinto just like anyone else. And so as the protocol grows, we benefit like any other participant. There is a small 3% allocation of mints that go to funding development. But for example, I as a founder have never taken any of that. It exclusively goes to funding development. So the incentives here are highly aligned in my perspective, where the people that are contributing to the protocol, the way that we all benefit is from people adopting the protocol and adopting the system.
Makes sense. So, are there like any certain fees, for participation or for a user who want to sign up? And if there are, what are the structures? How do you guys structure it?
There are no fees basically whatsoever. Even the AMMs where the protocol trades or where Pinto trades, there's no trading fee. So we've designed a system to get as low friction as possible. Ultimately, if you're creating money, if you're creating currency, part of the utility of currency is how low friction it is to use it and how low friction it is to trade it. So we've tried our absolute best to remove any sort of fees or friction to use the protocol whatsoever. So if you buy Pinto and deposit it in the system, the only fees you're going to pay are base transaction fees. There's no protocol native fee or anything like that.
Nice, nice, nice. Makes sense. Seems this is like it's an open flow for people to make use of. Sounds amazing. So, how does Pinto help people manage or grow their money better? How do you guys help people to manage and even grow their money?
Well, when you think about what the function of currency is, there's really three use cases historically. What economists would say. There's storing value, there's serving as a medium of exchange between different types of value, and there's serving as a unit of account for loans and for value in general. When it comes to storing value, Pinto acts as a store of value because it is low volatility in nature. And if you hold the currency deposited in the system, you receive yield. So you can actually grow your value over time. When it comes to acting as a medium of exchange, depending on, and this is maybe getting a little too into the weeds of the protocol, how it works exactly, but if you provide liquidity to the protocol or use Pinto as the medium of exchange in which assets trade against, you have the potential to receive a portion of all future Pinto mints. So when you think about people operating within DeFi, developers issuing new currency, traders providing liquidity to things, if you provide liquidity with Pinto or your asset trades against Pinto, you or it have the potential to benefit from the mints from the Pinto currency. So as a medium of exchange, this is one of the places we feel like Pinto can really excel because of its low volatility nature, but also its very competitive yield. It makes it potentially a very strong medium of exchange within DeFi and crypto in general. And then finally, as a unit of account for value and of loans, when it comes to value itself, Pinto's low volatility nature makes it a very good accounting tool. You could make an argument that if you're just accounting for value, it might be better to use something like US dollars, which everyone else uses, which is legitimate. But when it comes to unit of account for loans, Pinto has the potential to issue loans at a more competitive interest rate than any other currency in DeFi because of the fact that it has endogenous value. So one of the features that we plan on implementing in the future is to have the protocol itself actually issue loans denominated in Pinto, where if you think about it, if you're borrowing Pinto now, that may turn into short-term demand because people may borrow it and sell it. But in the future, they'll have to buy it back and pay interest on top of it. So in that way, the protocol has the opportunity to lend out currency to borrowers at a very low interest rate, significantly lower than any other interest rate available in crypto. But then on the flip side, it turns into more demand that will ultimately get paid out to holders of the currency. So when it comes to storing value, Pinto is able to store value across time in a highly efficient way due to its low volatility and its yield. When it comes to a medium of exchange, quite a similar dynamic where the low volatility of the currency and the high yield offered by it makes it serve as a great medium of exchange. And then finally, when it comes to a unit of account for loans, the protocol also has the opportunity to issue loans at a really low carrying cost such that it can outcompete other currencies in DeFi.
Makes sense. Sounds promising. So let's talk about the main goal, long-term goal, what you guys are looking forward to achieve with Pinto. Can you share some, guideline on what users should be looking forward to see in Pinto in the next couple of years or couple of months?
So let's start with the next couple of months. In the next couple of months, we're going to be putting out this final upgrade that I mentioned to the current iteration of the model, which is called the convert bonus system. It's highly technical, so I don't think it necessarily makes sense to go into it at the moment, other than to say that it should create a system for people to earn extra yield by further contributing to decreasing the volatility of the protocol. So generally, the way the system works is it never takes any actions directly in the market. Instead, what it does is it creates incentives to encourage each individual participant to act within the system. And the reason it does this is to prevent manipulation, where if you just have the algorithm, because it's a public, transparent algorithm, acting deterministically, there's the potential for people to game it and to extract value from the protocol. And so instead, what it does is it creates incentives for people to act in the way that the system wants. But because the protocol doesn't do it directly, the individual actions of the protocol are sort of, you have to model it as occurring at random intervals because you don't know when people are going to act. And so in that way, it prevents manipulation. And so this piece of this current layer of the incentive mechanism, the convert bonus, offers a bigger bonus than ever before, or a bigger, more fine-tuned incentive than ever before for the system to encourage people to participate in the peg maintenance or in the decrease of volatility of the system. So this is going out in the next couple of weeks, maybe a couple of months, and it marks a major chapter in the development of Pinto. Beyond that, we're going to be doing a lot of work in general to encourage the wider adoption of Pinto across DeFi. And so now that the protocol is at a point where we feel like it really is ready for prime time and ready for the world to take a serious look at it, once this final upgrade goes out in the next couple of months, we'll be doing our best and to appear in spaces like this to get people to take a serious look at Pinto and try to spread the good word. So right now we're trying to fine tune the model, and shortly thereafter, we're going to really try to get people to adopt it more widely.
Makes sense. I love it. So lastly, before we open the floor to some community questions, there's something I would like to, talk about the name Pinto itself. What's the narrative? What inspired it? Can you give us a brief overview? Why do you choose the name Pinto, and what's the secret behind it?
Well, as I said before, Pinto is a fork of Beanstalk. And so in many ways, we wanted to honor the history of the development of algo stablecoins. And Bean was the original. And so we wanted to stay within the theme of beans in general. So we thought Pinto was quite a catchy name and in line with that theme. Now, in general, when we think about how we expect this whole space to go down and algo stable development to go down, we expect there's going to be multiple versions of this current all competing with one another. And so we like the idea of playing into this Bean theme where we expect more people to be potentially issuing forks of whatever the latest model of Beanstalk is, if you will, where we're working on Pinto, but someone may spin up Garbanzo or something like that in the future. So all keeping within the Beanstalk theme.
Makes sense. Awesome. I think that's pretty much good, and that clarify oh certain introductory question from my end, and thanks for the clarification. So before we jump into some audience question, do you have any other thing you would like to add in from your side? If so, it will be an honor to have you gladly do so before we start taking questions from the audience.
Thank you, Andrew. Ultimately, Pinto is a community-based thing. Money is fundamentally a social phenomenon. So for having you here and for your community for listening to this and for considering Pinto and participating. We have a Discord, which is a lot of fun. We have weekly town halls. And so if people feel like what I'm talking about is potentially compelling, if people feel like the threat of centralized stablecoins resonates with them, I would highly encourage you to come check this out, ask questions, of course, in the rest of this AMA, but more generally, come participate in the future of money.
Perfect. Amazing. Thank you so much. So I think it's actually time to hear from you guys. If anyone do have a question, you know how it works. You do want to raise your hand. As usual, there's a reward for ask questions. So if you have a question, you can drop them in the comment section, but I would prefer you raise up your hand to speak. So let me go through the chat and see. Okay, give me a second. Okay, let's start with Queen. Queen's Glow, go ahead
All
and
right,
speak.
am I being heard? Can you guys hear me? Hi?
Queen's
Oh,
Glow,
I
are you there?
can't hear.
We cannot
Okay, I
hear
was
you.
asking if
Please
I'm
go
being
ahead and
heard.
speak
Am I
loud
being
and clear,
heard?
please.
Hi, can you guys hear me?
Hello, Queen's Glow, are you there? If not, we'll give someone else a
Is it
chance.
better? Can you hear me now?
Yeah, we can hear you.
Okay, so basically, it's been an amazing session. I wanted to ask, how does Pinto handle extreme market conditions? For example, if there's like a sudden ETH crash, how do you handle that? That's my question.
Thank you for your question, Quinslow. There are a variety of different incentive mechanisms that the protocol uses to minimize volatility. So the nature of the system is that the price of Pinto generally comes from the liquidity that the Pinto trades against. So even though Pinto has endogenous value, when you need to get a price of Pinto, the price comes from the liquidity pools that Pinto trades in. So let's say that you have a 10% dip in the value of the assets that Pinto trades against. In the instant, that would cause the price of Pinto to also decrease 10%. So then the question becomes, how does the protocol minimize volatility? So there's a couple of pieces here. The first is that the protocol tries to borrow Pinto from the market. So when the price is too low, Pinto offers pods to the market. It attempts to issue debt to the market. So if people want to lend to the protocol, they need to either lend existing Pinto or they have to buy Pinto, which would bring the price back up to lend to the protocol. And when people lend to the protocol burns the Pinto that was just lent to it and decreases the supply. So as the supply decreases, the price comes up. Now, the second layer of the incentive mechanism is something called converts, where if you think about the structure of deposits in the system, you have people that have deposited pure Pinto, and then you have people that have deposited Pinto LP tokens that are half Pinto, half ETH, or half BTC, or half USDC, for example. Converts allow people to, while maintaining their deposits, to basically add or remove Pinto to and from the liquidity pools. So when the price is too low, people can convert up and are in fact incentivized to convert up, which would mean effectively taking your LP token and removing the pin and then just holding deposited Pinto in the system. And so as the Pinto is removed from the LP token, that actually has the natural effect of bringing the price back up. And so the question is, how does the protocol actually incentivize converts? And this has to do with the various internal prices that the protocol offers you for taking various actions. I'm happy to get into the deeper weeds of that, but perhaps it might be a little bit too in the weeds for a setting like this. But if people would like, I'm happy to explain some of the incentive mechanisms themselves. But at a high level, the protocol brings the price back up by borrowing and from incentivizing people to remove Pinto from the liquidity pools, both of which have the effect of increasing the price.
Okay, that's pretty amazing. That's good. But then, can you hear me, please?
Can I what?
Am I being heard?
Yeah.
Can you guys hear me? Okay, so thank you. I was saying, I really appreciate how you broke down, my question. But I was saying, on, the space, we've seen how brutal, how brutal that spirals can be in the algo stables. But then I feel like, personally, guardrails like redemption caps or time delays are essential, I think you quite agree. But then I wanted to ask again, are there like circuit breakers, redemption caps or mechanisms to prevent, these death spirals?
That's a great follow-up. So actually, I wouldn't agree that you need some sort of cap or circuit breaker. In fact, I believe that if you look at what happened to Terra Luna, the cap was part of what exacerbated the explosion of that protocol. Pinto actually takes a quite unique approach to volatility, which says that if people are willing to leave the system, it's actually healthier for everyone that's going to stick around to let them leave at a lower price. So the protocol actually makes a trade-off, an explicit trade-off, where it prioritizes or prefers short-term volatility, even if it's a significant amount of volatility, in the name of long-term sustainability. So the way it actually works in practice, there's something called the stock system, which is basically the protocol's native bank run prevention mechanism. And the way that it works is when you deposit into the protocol, you receive a deposit slip associated with your deposit, but you also receive something called stock, which is the thing that actually entitles you to yield, and something called seeds. And every hour, you get your seeds grow more stock. You grow more stock over time. And when you withdraw from the system, if you're going to participate in a bank run, you actually have to forfeit all of your stock and all of your seeds. And the more stock that you've accumulated, the higher the opportunity cost is for leaving and then coming back in the future, let's call it. And so the system has a bank run prevention mechanism where if you are going to withdraw, you have to realize an explicit opportunity cost for doing so. But if you want to leave, the protocol says feel free to leave. You may take a significant haircut on your value because the price is too low. You may drive the price lower, but the protocol generally accepts that as just part of the system, and volatility is part of the game, and instead says, okay, how can we minimize volatility? And so just there's a second order effect here of the stock system that I think is worth going into, where as other people leave and burn their stock, I, as a depositor, that's faced with an existential decision. Do I stay or do I go? Should I participate in the bank run or should I hang around? As other people leave and burn their stock, the value of my stock actually goes up because there's less stock overall. And so the premium, the benefit that I get, where if I have more stock, I get more yield in the future, that goes up as more people participate in the bank run. So the protocol, in summary, has no cap, no circuit breaker, no explicit way to stop the bank run. Instead, what it does is it introduces an anti-reflexive incentive mechanism that is designed to, as the bank run grows, create larger and larger incentives to stick around, if that makes sense.
Makes absolute sense. I appreciate your detailed breakdown. I appreciate the transparency, and it feels like Pinto is addressing the biggest pain points in stablecoin. I'm looking forward to testing Pinto firsthand. In the range, adoption will tell. Real adoption will tell the story. Thank you so much. It's been great here, Ben.
Thank you so
Thanks so
much.
much for your question. Thanks for the question, Chris Glow. Let's go with Sophia, then we can go with Jeff. Let's Sophia,
Hi
you like
there.
Sophia. Hello.
Hey, Sophia, how are you?
I'm good, and you?
I'm well, thank you.
Okay, so as Pinto gains users, how do you guys ensure scalability without compromising on speed or cost? And again, are there like specific scaling solutions like layer 2 being explored in the future?
Thank you for your question. So I want to bifurcate scalability of the currency from scalability of the network that the currency lives on. So in my opinion, the most important part of the scalability question when it comes to stablecoins is the scalability of the currency. So if you look at USDC and USDT, in theory, they can scale, but they scale by buying up more and more treasuries and holding more and more dollars in bank accounts. And this actually, in some sense, is not really scalable because as you're realizing a larger and larger opportunity cost for locking up that capital. If you juxtapose that with Pinto, where Pinto has endogenous value, there's actually no limit to how much endogenous value the system can support. So as a currency, the protocol can grow to meet arbitrary amounts of demand and doesn't need to lock up more and more collateral to do so because it doesn't lock up any collateral. Of course, it does want to attract some healthy amount of liquidity in order to provide people easy access to the protocol with little slippage, but it scales in a radically different mechanism than something with collateral. When it comes to the scalability of the network, right now Pinto resides on Base, which is an L2 that scales a decent amount but doesn't scale that much because it still relies on Ethereum blob space. Ultimately, Pinto is able to migrate to more scalable L2s if necessary, or potentially, if it really grows significantly, at some point in the future. So when it comes to network scalability, that's a problem that I think is generally being addressed by the technological progress in crypto as a whole. Whereas if you look at the scalability of the currency, that's where I feel like Pinto really differentiates itself as better than any other stablecoin that exists today.
That's really good.
Oh, I'm having a hard time hearing you, Sophia. I think you're still talking, but I'm not able to hear you.
Thank you. Can you hear me now?
Yeah.
Thank you very much. Thank you so much.
Of course. Who's next? Andrew, are you there? I think you might be muted. I think Andrew's still muted, but I think go ahead, Abwa.
Okay, can you hear me?
Yes, sir.
Yeah. How you doing?
I'm well, thank you, sir. How are you?
I'm good. I'm very good. So, transparency is one of the biggest factor for trust in DeFi projects. So my question is, how does Pinto ensure transparency in its protocol from collateral mechanism and government decision to system as can fully trust how value is managed within the ecosystem?
Thank you for your question, Abwa. If you could just mute, thank you. I was just getting a little feedback. So the transparency, and I would even go further and say verifiability, is one of the most important parts of Pinto, where we believe that in order for people to really adopt Pinto as currency, it has to be verifiable and transparent. So there are a couple of things in place. One, all of the Pinto code is open source and verifiable. So for those of you that are more technical, you can go in and read all of the code yourself. More than that, though, we have a white paper that is quite rigorous in nature that has been designed to make it such that all of the rules of the protocol are there for anyone to read and understand. So the white paper is on the order of 70 or 80 because the protocol is quite complex. But in that way, we make it such that it is as accessible to people as possible. We also have articles that we're putting out regularly to explain the mechanism to people. So in addition to it being verifiable and rigorously documented, we also try to make it as accessible to people as we can. The other thing that I would say is, Beanstalk, its predecessor, was exploited via a governance exploit. And so in the short term, we have Pinto currently governed by a multi-sig, which is suboptimal. But we've been working for the past couple of years now on a new type of on-chain governance system for smart contracts that hold value like Pinto, where we are introducing that hopefully around the end of this year or early next year, where we will have an on-chain, totally permissionless governance system where we're able to move the system more towards an immutable model. So right now, the smart contracts are mutable in nature, which obviously does have some transparency because the multi-sig that controls the system can make changes to the protocol. But we have a plan in place to move to a permissionless, eventually immutable model for the entire system.
That's really nice. Can you hear me?
Yeah, we can hear you.
Sure.
Yeah, that's really nice. So, security is always a top concern in DeFi,
Yes, definitely.
Yeah. So, what security measures does Pinto have in place to protect users' funds and ensure the stability of the protocol against potential exploits or market manipulation?
So there's 3 tiers to the security model. One, Pinto is audited and has been audited many times, going back to the Beanstalk days. I think we've had on the order of 24 audits of the code base, which is quite a changing over time, but we regularly have the system audited. The next layer of defense is we have a bug bounty program with Immunify for over $1 million, where if a white hat finds a critical bug, the protocol will pay out quite a sizable bug bounty. It's one of the larger bug bounties in all of crypto, which incentivizes white hats to keep the protocol secure. And then the third layer of defense is we have an integration with Hypernative, which offers real-time off-chain monitoring, where if the Hypernative security system detects any sort of vulnerability, it has the option to basically shut off the protocol temporarily and remove its functionality such that it will be safe from any potential exploit. So we have regular audits. We have the bug bounty program with a very sizable reward for disclosing any sort of bugs. And then finally, we have the real-time off-chain monitoring of the system approach to security that, God willing, will keep the protocol safe for a long time in the future.
Thanks for how you structure the answer to my question. I really appreciate, and I'm hoping to see more innovative project in Pinto. Thank you.
Thank you, sir.
Thank you for your question, Obuafo. So let's go with Jeff. Nasty, got your mic is in here.
All right, thank you very much, Ben and Andrew. I really love this session. So I would just like to ask this simple question, like, are there plans to integrate Pinto as collateral in other Base native lending or borrowing protocols?
Well, I think ultimately the answer is that would be great. But when you think about the potential use cases of Pinto, using Pinto as collateral is out in a spectrum of utility from the perspective of when you think about using Pinto, which has endogenous value as collateral, it really needs a larger market cap and I think a deeper market in order to function as a high quality collateral. So I think what's more likely in terms of utility in the short term, particularly when it comes to lending, is that Pinto is an asset that is borrowed, particularly from the protocol itself, to be used for loans, as opposed to necessarily posting Pinto as collateral to take out a loan in another currency. Of course, as Pinto grows and achieves adoption, I think that would be a wonderful use case for the protocol. But using Pinto as collateral does introduce some risk to the system that I think at this early stage make it such that that's not really an optimal use case for the currency. But in the long run, it definitely should be.
Oh, that's nice. Thank you very much for
Thank
this
So
you.
lastly,
explanation.
thanks for the
But then
question.
let's skip.
Go ahead. Go ahead. Go ahead.
Can I go?
Yeah.
Please.
Okay. Okay, thank you very much. I wanted to ask again, how will Pinto scale user adoption without relying on unsustainable incentives?
That's maybe the $1 trillion question, Jester. So my current answer to this is, so Pinto has the opportunity to serve as a low volatility medium of exchange with very competitive carry costs. So we have a wrapper, an ERC20 wrapper of Pinto deposits called S Pinto, where S Pinto basically inherits the low volatility of Pinto and the yield from Pinto, but wraps it in an ERC20 such that it can be adopted in other DeFi protocols. And my expectation is that sometime in the next Pinto is going to start to be used as a settlement asset in a perpetual exchange. I've been working on this perpetual exchange for a couple of years now. I think it's going to be a revolution in finance in general. And we intend to offer Tether denominated perps and Pinto denominated perps. And so traders will have the opportunity to select between traditional perps that settle in Tether that will have competitive funding rates with the rest of DeFi or any perpetual market. But then they'll also have the opportunity to trade Pinto perps, where on the one hand, you do accept some additional volatility in the price that you're trading. You don't just get the BTC price, for example, if you're trading the BTC Pinto perp instead of the BTC USDT perp, you get the Pinto price volatility as well. But what you get in return is the funding rates on both sides of the trade will be subsidized by the Pinto yield. And this has a really interesting network effect and positive feedback loop, where as more participants are holding the BTC Pinto perps or the ETH Pinto perps or other Pinto settled perps, that actually creates more demand for Pinto, which will lead to more yield, which will lead to more competitive funding rates. And this has the potential to kickstart a positive feedback loop that I think really has the potential to scale demand for Pinto in the grand scheme of things. So one of the things we've really tried to stay away from in the development of Beanstalk and now Pinto is anything sort of like what Anchor and Terra did, where they just created fake yield out of nowhere that set the protocol up for major growth in the short term, but ultimately set it up for dramatic failure. So we've avoided any sort of inorganic fake yield like that, and instead have been trying to create a system where there is real product market fit that will create demand. So my best guess for where that's going to come from, and in a scalable fashion, will come from a perpetual market finally adopting S Pinto as a settlement asset.
Yeah, thank you very much. I really appreciate the way you explained this my question, and I'm looking forward for the embedding of all users into. Thank you very much, Ben. Thank you very much, Andrew.
Thank you for your
Thanks for the
question, Jester.
question, Jeff. So let's go lastly. Jordan Jati, your mic is in your ear. Jordan. Jordan, are you there? Hey, man, can you hear
Can you
me?
guys hear me?
Yeah, we can hear you, man.
Yeah, thank you so much for the opportunity. Hey Ben, how's it going?
What's up, Jordan? How are you?
I'm doing all right, man. So my question is pretty
Jordan.
simple. I just wanted to
Now
ask
you're back. Now you're back.
Pinto's long term. Can you hear me?
Yes, go ahead. Sorry.
Yeah. So I just wanted to ask what are Pinto's long term inflation projections on the different adoption scenarios?
Well, ultimately, Pinto has the desire to be a widely adopted currency. So right now, the supply is about 10 million, 11 million. And I believe that Pinto has the potential to scale into the trillions. So you do the math, that's 100,000x if it gets to a 1 trillion supply in inflation. Now, the big difference between Pinto and something like the US dollar is when the US dollar supply gets inflated, the holders of US dollars all get fucked, basically, because the money that gets printed goes to not everyday people. Pinto, on the other hand, all of the inflation goes to the currency depositors of the currency or to paying off debt, which creates more credit worthiness, which lets the protocol scale more. So even though the protocol may grow in supply or inflate is one way to think about it, 100,000x if it really succeeds. The difference is that the inflation will get paid out to all of the holders. So it's not inflation in the traditional sense where people think about inflation as hurting the people, as theft. In the case of Pinto, inflation is a yield that gets paid out to all of the holders.
Thank you so much for that, Ben. I really appreciate it. That's gonna be all from me. Thank you so much.
Thank you, Jordan.
Thanks so much for your question. Thanks, Jordan, for your question. So I think that's pretty much all we're gonna take for community question. So before we bring an end to the session, Ben, is there like any, additional statement or like wrap-up words from your end before comes to an end?
Well, I just want to thank everyone for being here, for listening, for giving me the opportunity to share Pinto, which is something I'm very passionate about. And I would encourage people to join the Discord, to come ask more questions in the town hall or asynchronously in the Discord. The more that people start to take this seriously, the better off I think crypto will be as a whole. So very grateful to you, Andrew, for reaching out and having me here, and for everyone for participating.
It's an honor, and it's gonna be cool and surprising if we see Pinto among the top five stablecoin in the nearest future, which is going to drive an interest and also gonna be like a big shout out to us here because we have an early opportunity and early access towards what the company is building. So it's really an honor to have you once again, Ben, and looking forward to hear from you in the future as the ecosystem keeps on growing.
Thank you very much, Andrew. Appreciate you and everyone else.
Thanks, man. So do also have a great day, everybody. As usual, for the best question winners, I will reach out directly to you, DM for your prizes. Thanks once again. Bye, man.